Let's in fact welcome our guests on board. We already are joined by Mr. Rudramurthy. He's the research head at Vachana Investments. And we also have with us Dharmesh Kant, head of equity research at Chola Securities. Warm welcome to both of you and thank you so much for taking the time out. Well, we have seen 2 days of consecutive moves on the higher side on the Nifty. Let's get Rudra back on board. He is with us. Rudra, we were discussing the entire banking space just before you joined in. HDFC Bank finally hitting a record high, mark yesterday. A lot of it has to do with the MSCI rejig, and of course PSU banks. The way they have rallied over the last few days is also, keeping investors' attention, back to the PSU banking space as well. Where exactly would you be more bullish, PSUs or the private sector leaders?
First of all, banks were the only sector where you had some amount of valuation comfort, relatively much better compared to other sector. And also, continuously I was talking about stocks which are still trading above those lows of October.
Yeah.
And if you see, I was talking about HDFC Bank or even both private as well as public bank. Look at even SBI. The rally what we have seen in last 2 days has been from those very highly oversold zones, and post the Adani news, these PSU banks were butchered. And that was a wonderful opportunity where people could have bought, where risk reward was very much in your favor to go long. But however, even at current market levels, I say yes, this 2 days of rally and 1,000 points move what you have seen in Nifty, we have to see some amount of time-wise correction right now. And also what is very important is, look at the result season. Always remember, stock prices are slaves of earnings. The last quarter earnings, 75% has been below expectation, both on the top line as well as bottom line. So I am of the view that till you see February, once our budget comes out and we see the next quarter's earning coming out, that is the October-December quarter earnings coming out, and we see some amount of recovery, I will not be surprised that this rally what we have seen will see some amount of more time-wise correction, and we should settle somewhere here at index level. No doubt we fell 10% from the top on index and we have recovered about 4% now. But do remember, if you see most of the stocks in people's portfolio, they are on an average down 20 to 30%. And the recovery in last 2 days for their portfolio has been hardly even 0.5 or 1% when Nifty has gone up 4%. So we have to keep in mind that portfolio bleeding has still not stopped. I am of a strong view that this market will not go back to all-time highs very soon. Minimum it will take time till February 2025, and for these portfolio stocks, mid and small cap, to come back to those high rich valuation levels and those top, it will take some more time post even February 2025. We are all talking about 38 days of selling from FII and yesterday's buy figure, but if you can understand MSCI rebalancing and 15,000 crore of buying happened because of MSCI. So after considering that
Right.
15,000 crore of buying, we hardly have 10,000 crore net buying yesterday. That means it is still 5,000 crore of selling by FII yesterday, keeping aside the MSCI rebalancing. So for me, this market is more sector specific, stock specific. Don't just see last 2 days of rally. It was easy to call that before, but now I will be very stock specific, sector specific. Few names where results were good and stock can still do
Sure.
good from current level. I can name Federal Bank, I can name Indian Hotel, Ramco Cement, and banking. Most of the stocks, both private and public sector, they can continue doing well, Sakshi.
Wonderful. Let's get Rudra on board. Rudra, you've time and again come on our channel and talked about this space, and you've always talked about the leader in the pack to be the safest space to be in for investors like Bharti Airtel. Would you stick with that view? With this kind of news developments coming in from the government side, how should one assess what's happening in the telecom space?
Definitely, Sakshi, I will buy only Bharti Airtel if I have to pick among the 3 stocks which are available from telecom. But however, if you want to pick a mid-cap stock, even after today's move of about 4%, Indus Tower looks very good for me. It was
Okay.
at around 410, 420 zones where I
Yes.
was saying it is a mouth-watering buy. And we have seen already that move of 4.5% now. So for me, if you want to stick to telecom sector, I will definitely go with Bharti Airtel and Indus Tower. And Indus Tower will be the indirect beneficiary because of even Bharti Airtel doing good. And Indus Tower from current levels can even go to around the 380, 400 zone. And for
Okay.
me, Bharti Airtel at around 1500 has a very, very strong medium to longer time frame support zone. So any dips to those levels, and even at current market price, I will still stick out and buy Bharti Airtel. And my second choice will be Indus Tower. I will definitely avoid Vodafone. And might be, yes, it can be a stock which you can bet 5% of your portfolio, thinking like it's like a lottery. And if you lose 5% of your portfolio. But if you make money, yes, it can be a doubler or a tripler from here. But rather than betting on Idea Vodafone, I would directly love betting either on lottery or on Goa casino games than going with Vodafone Idea from levels of around 100, 200. I don't know from the top where it is now in single digit. But yes, you might see some amount of recovery from current levels of around 6 or 7 rupee. Can it go to that 11, 12 rupee, and can it be a doubler kind of a stock from here? Yes, keeping your fingers crossed, you can bet 5% of your total portfolio's value on Vodafone Idea, but I can't take bigger bets here. Rather, I will prefer Bharti Airtel, and second choice will be Indus Tower.
Okay, got that. Hey, got it. So that's the view coming in. Rudra, how about you? Within the Adani group, would you still have confidence in some of the group stocks, or is it advisable to just completely stay away till the time dust settles on all the developments?
Sakshi, this has been the easiest question I can answer, and very clear on Adani group of stocks. Number one, look at valuation and also see where were the prices of these stocks before the big fall which came from October. So if
Yeah.
I see what is the high on Adani Energy before October 1st, where the overall market fall came, Adani Energy, if you just go and see, or Adani Green Energy was just trading at around 2000 rupee, if I'm not wrong, and that was the peak it made, and that was at around September last week to October. From 2000 rupee, the stock is now available at around 950. That means it has corrected 50% in last 1.5 months. Okay, even after 50% correction, let's assume someone wants to buy Adani Green right now. Kindly just look at what is the trailing PE multiple. I'm not talking about forward looking earnings and then discounting them and then coming out with the forward PE. I'm talking about the trailing PE that is coming at around 120, 130 times after a 50% correction in the stock. So my question to you, after a 50% correction in stock, do you want to buy Adani Green at a PE multiple of 120 times? And do you expect a growth of around 120% to happen year on year? And it is already on a larger base, and that too after a 50% correction in stock price. So for me, it is a clear no. And only bad news, Sakshi, Adani
Correct.
Green Energy is not available in F&O to short.
Okay, right there. Clear no from Rudra on the Adani group of stocks. Okay, then let's look at some of the other pockets where perhaps there could be some opportunities. Rudra, have you identified any opportunities within the mid and the small cap space where investors could look at, particularly now after some retracement is happening within these spaces as well?
Sakshi, I'll be very, very clear. I feel personally that still market has not yet made a bottom. Stay with large cap stocks because valuations are more comfortable compared to mid and small cap even after this correction. And if you force me to buy some mid or small cap and be very stock specific, as I told you last time, even I want to buy those stocks where the quarterly performance especially has been still better. In the recent results, if you see, results are better or still good and stock has not performed equally. So for example, let me take Indian Hotel as an example. Fantastic result, stock even did well, and even at current market price, I will be a buyer in Indian Hotel. It's a 4-digit stock. Very soon you have to see Indian Hotel coming to 1000 plus level, and
Right.
for me that is one stock which you can buy. I was talking about Federal Bank. Yes, quarterly results were good and stock performance is still good. So Federal Bank at around 210 offers great value to me. And look at OMCs, for example. Crude coming down is definitely good for OMCs. And for me, in the order of preference, I will be first looking at Hind Petro at current market price of 380, or even last 2-3 trading sessions before it was available closer to 360, and now it is at around 380, 390 zone. Yes, for me, HPCL even at current market price looks good. crude coming down is good for OMCs and HPCL is good. You can even pick up BPCL and IOC for that matter. Ramco Cements came with good quarterly results. Stock price can do good from here. So if you want to pick some stocks from mid cap, look at these names like Federal Bank, Indian Hotel, Ramco Cements, and Indus Tower, OMCs like Hind Petro, BPCL. All these are stocks which one can look at.
Perfect. So there you have it, viewers. I hope you've taken down this list of names that Rudra has mentioned, where you can actually look at for valuation comfort, for upside from the current levels as well, in case you're looking to pick and choose and select stocks for your portfolio in this slight signs of recovery that are returning to the D Street. The other space is the defense space that's also buzzing very sharply. And from yesterday, we've seen momentum return to the defense stocks strongly as well. Even today, stocks like Garden Reach Shipbuilders that are up 7% in trade. About 1546 levels can be seen on this one. Cochin Shipyard is 5% higher at 1432. Mazagon Dock is up about 4%. You have BEL, HAL, both about 2.5% higher. Data Patterns, the index itself is up by about 2% right now. Your own sense, Rudra, on the defense space, do you see confidence returning to this space, or do you still feel it's going to be momentary?
Sakshi, very clear view. First of all, I was giving a big no-no for either defense or shipping or railway stocks for that matter, keeping in mind valuation and the way in which these stocks had already moved up. But if you now see, for example, Hindustan Aeronautic, HAL, the top was at around 5,600. From there, we saw a bottom which was closer to 4,000 rupees. So stock corrected from its peak close to 1,600 point, and percentage wise, if you see from those levels of 5,600, if I take 1,600 point, that is close to 30% kind of a correction from the peak. So having seen this kind of a correction, yes, if I have to buy one stock from defense, it will be HAL. No doubt it has moved from those 800 zones to that 5,600 level. But yes, strong long-term support. And also if you see the June lows, what HAL made technically on chart, that was also closer to that 3,900, 4,000 level. So yes, closer to 4,000, it becomes very, very attractive to go long on HAL. Even at current market price or on dips to levels closer to 4,000, I will be a buyer in HAL. But few other names, whatever I see either from railway or shipping sector, I will still avoid them because of, again, even after this correction or whatever price move we have seen on the downside, valuation comfort is still not available. Rather, I will go for either OMCs. If I have to pick up some PSU stocks, I go to PSU banks, or to OMCs at current market price. I will avoid, in general, all the three, that is shipping, railway, as well as the defense sector. Only for the news of the railway as well as the defense, currently what we have, this kind of an up move you are seeing for last 1 or 2 trading session. But again, valuation will kick back, and if you want to buy one of these stocks from this sector, I will still prefer HAL at current market price and on dips to 4,000.
Okay, got that. So there you have it within the PSUs. All the pockets have been addressed by Rudra right there. Defense, railways and other PSUs, especially the OMCs, where he is more comfortable with at the current levels right there. From the broader markets, let's see what are the big moves that are coming in. You have Tips Industries or Tips Films that's up for the second day in a row. Yesterday it was a 20% circuit. Right now it's up about 15 odd percent. Then you have stocks like RPP Infra Projects that's up 10%. Shivam Autotech that's up 9%. You also have stocks like Emcure Pharma that's up by 7.5% in trade. Strong surge being seen on this one as well. Apart from this, we also have Triveni Turbine that continues to be in thick momentum from last few days, 4.5% higher. Yes Bank is also up by about 6.5% in trade. So those are some of the stocks that are buzzing in the broader markets right there. Within the Nifty Next 50, you have Macrotech Developers that again moves up pretty strongly within the real estate pack, 5% higher. Varun Beverages continues to surge up, about 3% up right now for this one. Both PFC and RDC are also pulling up within the PSU pack right there. You also have some momentum coming back to info edge kind of stocks right there. And of course, both Zomato and Swiggy are in thick momentum. Let's look at Zomato and Swiggy right now. Rudra, I wanted to understand there are several triggers for Zomato. It's going to get included in the Sensex since December. There is expectation of a lot of passive flows coming in also on Zomato. First, tell us, do you really expect further, rally from here on as well? It's a comeback after those declines that we have seen in the recent 5 weeks correction. It's also pulled up pretty much to 280 kind of levels. Your own sense on Zomato from here, and whereas on Swiggy as well, looking at the valuation comfort that continues to exist on Swiggy versus Zomato right now, do you feel Swiggy has a better chance of outperforming right now? How should investors be placing their money between these two?
Sakshi, very clear view in terms of new age companies, e-commerce. If you want to put your money into this sector, I will still have Zomato at current market price as my number one pick. In fact, for me, Paytm and Zomato are the two stocks which I will buy. No doubt, Paytm for me at 400, 500 was more comfortable. But even after this move towards that 800, 900 mark also, for me, Paytm is more attractive. No doubt, Paytm at 2000 was a clear no-no. But post all the fundamental changes, what happened, RBI ban, and then now coming back. And if you see, last time I was giving you a clear view, look at stocks in the month of October 1st, where the prices were. And today, if they are trading above the October 1st price, that is the first indication for me for the stock to buy. Look at where was Paytm on 1st of October and see where is the price today. Definitely today's price is still higher than October 1st price, and that tells to me that these are relatively stronger stocks, technically also because of price move. And also for me, both Paytm and Zomato will be my top two picks if I have to buy into this new age or e-commerce kind of a business. And let me tell you very clear, Zomato at around 270, 250 zones, it is a good buy. Strong support for this stock is at around 240. So buy at current market price, buy on dips, Zomato. Keep a stop loss at around 235, which is below that strong support of 240, and ride for target of around 350 to 400 on Zomato. And if you are a very long-term investor looking for at least 3 to 5 years kind of a time horizon, then I will tell you, yes, Swiggy can be a better bet than Zomato. But if you are a short-term, 1 year kind of a investor, 2 year kind of an investor, and not that 3 to 5 year or a longer time frame, then I'll still pick Zomato at current market price, because Swiggy might take some more time for it to move beyond the comfort in terms of both profitability as well as getting more share. All that stuff will take some more time. So very clear view, if you have 3 to 5 year kind of a longer time horizon, or even more than 5 year, then go for Swiggy. If your time horizon is 1 to 2 year, I will still pick Zomato at current market price. But however, I will still avoid Ola Electric. I will avoid many other names in this same field of new age or e-commerce kind of a sector. I will not venture into any other stock except for Zomato as well as Paytm at current market price. And for long term, look at Swiggy. For shorter term, look at still Zomato.
Okay, got that. Well, we will thank you on that note, Rudra, for being with us on this show and helping us with your clear understanding of various sectors, pockets right now, and giving that guidance to all our viewers, which we always appreciate from you with utmost clarity in these times of uncertainty, which is the much needed, valuable advice at this point in time for all our viewers. Thank you so much. Appreciate your time with us as always.